Hello, once more welcome to my channel. We are going to continue with the income method of measuring national income. Here data is given. From that we have to calculate GDP at market price, gross domestic product at market price. We are going to calculate gross domestic income at market price, not the national income. It is domestic income, that is gross income. Okay, so according to income method, we know in order to calculate domestic income, that is NDP at factor cost, or domestic income is equal to compensation of employees plus operating surplus plus mixed income. We will get domestic income or NDP at a factor cost. Okay, so compensation of employees plus operating surplus plus mixed income, we will get domestic income or NDP at factor cost. So in order to get GDP at market price, GDP at market price is equal to NDP at factor cost. We have to make this net concept gross. So plus depreciation. So we will get GDP at factor cost plus net indirect tax. We will get GDP at market price. So this domestic concept, domestic income, net concept, we have to make it gross. For that, net plus depreciation, we can make it gross. Then both are domestic income. So no change is required there. Here factor cost should become market price. That is, we have to add net indirect tax to factor cost in order to make it market price. GDP at market price is equal to NDP at factor cost plus depreciation plus net. So first we will calculate domestic income or NDP at factor cost. For that we have to enter the value of compensation of employees. So is compensation of employees given? It is not given directly, but its components are given. Which are the components of compensation of employees? Wages and salaries in cash, wages and salaries in kind, and employers' contribution to social security. So wages and salaries given? Yes, it is given. That is 200. So compensation of employees is equal to 200 plus. Now wages and salaries given. So it includes in cash and in kind. Then next component is employers' contribution. Employers' contribution. If it is employees' contribution, we won't include it. It is employers' contribution to social security is 30. So compensation of employees is 230. Okay. Now next is operating surplus. Operating surplus is equal to rent plus interest plus profit. Okay. So is rent given? Rent is not given. Is it given? No. Interest given? Subsidy, consumption of fixed capital, wages, salaries, no. Rent is not given. Interest is not given. We know in the previous class we have mentioned operating surplus is equal to rent plus interest plus profit. If royalty is given, that also to be added. Rent plus interest plus profit. So if rent and interest both are not given, so is profit given? Yes, it is given. Profit is income from entrepreneurship. We know that there are four factor inputs: land, labor, capital and entrepreneurship. Land gets rent, labor gets wages, then capital derives interest and entrepreneur gets profit. So income from entrepreneurship is profit. So operating surplus, only one component is given, that is profit. It is 100. Any other component given of operating surplus? It is not given. So rent, COE plus OS, compensation of employees plus operating surplus plus mixed income. What is mixed income? Mixed income is 280. So mixed income is 280. Then wages and salaries plus employees contribution 30, that is COE. Then operating surplus only, profit is given. So what is NDP at factor cost? When we enter these values, 230 plus 100 plus 280. What is the answer? So domestic income NDP at factor cost is equal to 230 plus 100 plus 280. What is the answer? 610 crores. Is domestic income. Compensation of employees 230 plus operating surplus 100, 330. Then mixed income 280. 610 crores is domestic income we got. Now what is the next step? We have to derive GDP at market price. So GDP at market price. GDP at market price is equal to NDP at factor cost, that is 610 plus depreciation. Depreciation is consumption of fixed capital 40 plus net indirect tax is indirect tax minus subsidy. Indirect tax given as 80 and subsidy 10. So 80 minus 10 is equal to 610 plus 40, 650 plus 70 is equal to rupees 720 crores is GDP at market price. So net concept becomes gross by adding depreciation, otherwise consumption of fixed capital plus net indirect tax. Indirect tax minus subsidy 80 minus 10, 70. So 720 crores is GDP at market price.